Welcome back to Crypto Today, everything decentralized. Today we're going to be talking about trading cryptocurrencies in 2019. I am briefly going to be showing you guys some candlestick patterns to hopefully help you guys get better trades and hopefully get you guys better gains and profits along the way. Now, if you want to stay up to date with my daily crypto videos, Pundi X videos, make sure you hit that subscribe button and stay tuned. And let's quickly begin by saying that I'm not an expert at this, but rather like you guys, I am learning each day as time goes on. And with that out of the way, I'm quickly want to talk to you guys about the very basics of a candlestick. For those of you that may not know, a green candlestick represents a bullish candle. The red one will represent a bearish candle. Now each candle will typically have a wick, and what the wick basically tells you is that for this specific wick right here is that the price was pushed up to here, but then it was rejected and it closed right here. Now for a bearish candle, the open will be at the top and the close will be at the bottom. And the exact opposite for a bullish candle. The open is at the bottom and the close is at the top. Now with those basics out of the way, let's quickly begin by showing you guys the engulfing patterns. Now right here we have a bullish engulfing pattern, which basically signifies a reversal towards the upside. And as you can see, the bullish candle, the green candle, completely engulfs the red candle. So that's a very good indicator that we're going to have a short or long move towards the upside. Now right over here we have a bearish engulfing candle, which is basically tells you the exact opposite. It tells you that there's most likely than not going to be a reversal towards the downside. So you can expect the next several candlesticks to go down, to be bearish candles. Now, you also, something that you want to keep in mind, like I said in my previous video, is like you never want to use just one indicator, and that applies here too. You never just want to use one set of candlestick patterns. You typically want to look at the previous candlesticks to kind of give you a better feel and a better understanding of where the market might actually be headed. Now, let's move on over here to the hammer. The hammer basically shows you that the prices are being pushed down but then heavily rejected and actually end up being closing up here. So this basically tells you that even though the bears kind of have like a strong influence in the market, the bullish influence is actually a lot stronger because it's actually heavily rejected. So you can expect this, if you see something like this, especially if you're in a downtrend, it'll typically signify that the next, most likely not, the next candlesticks coming after this, most likely than not, will be bullish candles. Now we have the shooting star, which is the opposite. The price is being pushed up, but it's being heavily rejected by the bears, and that'll typically also signify a reversal in the chart. So let's say that before this shooting star, the market has been moving up for quite some time, and then you get that shooting star. That will typically signify that most likely not the next candlesticks will most likely be bearish and go towards the downside. Now over here we have a dragonfly doji. This doji shows strength as the wick goes down low, yet the price is being pushed up. So it's the price, even though the bears are trying to gain control, the price is being heavily rejected and actually closes up here. So that will be a bullish dragonfly doji. Now the gravestone doji is the exact opposite. It's a bearish doji, which basically tells you that the bulls are kind of trying to gain control. As you can see, the price is being pushed up all the way up here, but then heavily rejected, and it actually closes down here. Now you might also see a different kind of doji, which will look something like this, and this doji would typically signify a indecision in the market. So it's kind of like the bears nor the bulls kind of know what's going to happen next or what they want to do next per se. And now let's move on to the morning star. The morning star basically tells you that the buyers end up getting in control. So the bulls end up taking control of this specific point in the market or in the chart. Because as you can see right here, we have a bearish red candle, a pretty strong one, and then it's met by indecision by this doji that tells you that. And then right over here we have a very bullish candle. So this would typically signify reversal towards the upside. So most likely not, the next couple of candlesticks will be moving towards the upside. Now the evening star is the exact opposite. This just tells you that the bears are gained control for this specific period in time on the chart. because as you can see again, we have a very bullish tendency, a very bullish candle right here, met by indecision, and then they decide that the bears want to take control, so it seems like they do here. So most likely than not, the next couple of candlesticks could most likely not be going towards the downside. Now, I'll say it again because I feel like it's something that you definitely need to learn, or not learn, but something that you definitely want to do when looking at these patterns. You definitely, again, you want to be looking at the previous candlesticks. So let's say you go and you see something like this. You see a bullish engulfing candlestick pattern, and you're like, oh wow, you know, that looks amazing, because it shows you that the bulls are in control. It completely engulfed the red one. So it's like you see this, and based on this alone, you're like, oh, you know, I'm going to jump in the market just because that's a very bullish move right there. So I'm just going to jump in because it's going to go up. And something to keep in mind is that the market doesn't always respect indicators, and it doesn't always respect candlestick patterns. So if you're just going based off of this pattern right here, then there's actually a chance that it could continue going downwards right after this bullish engulfing. Now, that's why I keep telling you guys that you want to look at the previous candlesticks prior to this one, so that way you get a better feel of the market and see how much influence the bulls have, or how much influence the bears have, and then that way you can kind of make a better decision once you see something like this. So you never want to go based off of one pattern alone. Keep that in mind, because it's definitely going to help you if you're able to look at the previous candlesticks. But that pretty much covers it for this video. But if you guys have any questions, or you guys didn't fully understand one of these patterns, then just leave that in the comments below, and I'll explain further to you guys about any of these patterns. Now, if you have any suggestions for another video, or just something that you want to see me cover eventually, that you don't understand fully, then just leave that in the comments below, and I'll be sure to get to that as soon as possible. Now, I'm going to be making another part video for this, which is basically going to be covering the same patterns as well as a couple of new ones, and then I'm also going to be looking into some candlesticks charts, so I can actually show you guys where these patterns fall into place and how you could use them on an actual chart to better your trading. But again, that pretty much does it for today. I'll see you guys in the next one.